So this tutorial of technical analysis is a continuation of 3-part series where I'll be guiding you about what is technical analysis. And in this tutorial, I'll be explaining a bit about some components of technical analysis. And let me start by explaining what are historical prices. So prices are the most important aspect in determining a stock's future, because without them there would be no charts and volume, and then obviously indicators would be of no value. So historical prices or past data of prices of a stock are really important. Now historical data of prices typically mean open, high, low and close, which means that at what price the stock opened on a given day, what is its highest price of the day at which the stock traded. A low price means the lowest traded price, and finally the closed price means the price at which the stock closed. So all these four prices are really important because using these prices charts are formed, and charts are used to determine patterns using which analysts determine the direction of a stock. So prices play an important role in technical analysis. Now the secondary is charts. So these, as I just told you, are formed by using the open, high, low and close of a stock price. So charts are nothing but a graphical representation of a stock's price over a period of time. For example, this chart is an example of Apple stock. Now this shows various things such as on a particular day of April 28, 2015, the stock price of Apple touched a high of $134. Its low was $129. It opened at $134 and closed on $130. Actually, if you just go on Google Finance, then you will be better able to understand it. And also if you hover over a particular day on a chart, then it will show the open, high, low and close of that day. And also charts show that whether the particular day the stock gained or lost. So simple way to know whether a stock gained or not is when the bar or candlestick, or you can see this vertical rectangular shape icons, is dark blue or not, or white. So now the dark blue means it opened higher but closed lower than that, which in turn means it lost some percentage and closed down lower. And white bar shows that the stock closed higher than it opened, hence telling that it gained. Charts also show a particular pattern, that whether the stock is in a positive trend or a negative trend. So for example, this is a chart of Nasdaq from 2012 to 2015, and this shows that Nasdaq moved from around 2600 to 5100. So this shows a positive trend, but actually it's not that simple, because technical analysis in reality is a lot more complicated than it seems right now. But now let me just focus on what it is, because as of now it's really that important. So finally, chart's main objective is to tell the reader or the analyst that what the prices are telling. That is, charts show a graphical representation of historical prices, and reader's job is to analyze what a chart shows. Now difficulty is in analyzing. So just like in fundamental analysis, I told you that different people have different opinions instead of reading the same information. And this is more true in case of technical analysis. So two persons may be looking at the same chart and analyzing it differently. So charts are very useful and shows a lot of information, but it's hard to analyze them. But of course not impossible. So the next component is volume. So volume is nothing but total sale or purchase of a particular stock on a given day or a specific period of time. Now most people are confused about volume, that whether the total volume is the number of shares bought or the number of shares sold. They also get confused that if the stock closed lower, then it may be the number of stocks sold, and if it closed higher today or gained percentage, then it may be stocks bought today. And I myself thought it that way when I was a complete newbie, but actually I was wrong. The thing is, volume is the number of shares traded during a day, or for that matter, any other period. So, if a stock has a volume of 100 million shares on a given day, then 100 million shares were traded. That means that buyers bought 100 million shares from sellers. Simple as that. For example, I bought 100 apples from you. That means you sold 100 apples from me, or I bought 100 apples from you. It's the same thing anyway. So similarly, thousands or millions of people are trading in stock market every day. So for example, volume of stock Apple was 29 million shares on 10th of December. Then on that date, buyers bought 21 million shares from sellers who wanted to sell. And that's basically volume. And why volume is useful? Because it tells a great deal about the demand or supply of a stock, such as more than average volume in a stock on a given day suggests that somebody is buying, and that somebody can be an institutional investor or any wealthy investor. And volume also tells that a stock is losing attraction and less number of people are interested, or at times it is also used with charts to tell that whether a chart pattern is emerging, which means that a stock is giving a buy or a sell signal. So for all these, volumes are really necessary. Now the last is indicators. So indicators are something, as the name suggests, that they indicate something, and they are calculated on a basis of price and volume of a security or a stock. So there are various indicators and all have their different methodologies. So a volume indicator indicates volume of a particular stock over a period of time. So a 50-day volume indicator indicates a volume of over a 50-day period that tells that how much volume was increasing or decreasing over that period of time. And similarly, relative strength index indicates overbought and oversold conditions in a security. And these indicators are really useful, and sometimes these are useless also. Well, actually it depends on an analyst which one to use, because there are various indicators and using everyone will make a perfect mess. So expert analysts only use a few which determine the supply or demand correctly. So basically all these components of a technical analysis are used for determining the future direction of a stock. And that's pretty much for this tutorial.